What's up, guys? Day Trading Knockouts here. Today, I don't got the same wife beater shirt like always, but today what we do got is we had a gap down day. We ended up closing the we ended up closing and filling the gap at the end of the day. We didn't get a gap fill reversal, and it took all day long to be able to close that gap. If you're wanting to be able to see how we can, prepare for tomorrow due to what happened on today's market session, stay tuned and let's get into the video to see exactly what it is we can do. You can take my advice. You can not agree with it necessarily, but nevertheless, let's at least talk about it and see what we can agree, disagree on, and just overall do to prepare for tomorrow. So let's get into it, guys. So for tomorrow's session, well, before we talk about tomorrow's session, we obviously got to talk about what happened on today's session. So first off, let's do this on a 5 minute chart. I got it on a I had it on a daytime frame chart. Let me go to my Trinity chart that I got right here. So let's go to the 5 minute chart, guys. So as you can see here, we there we go. So we had a gap down open on today's session. As you can see, this is previous day's low, and it pretty much took almost the entire day to fill the gap, and then we closed around the previous day's low. So so that's something that's interesting. And in terms of due to the fact that we gapped down and we rejected completely and closed on the high of today's session, this is showing that the overnight gap down open that happened today shows that sellers aren't really interested in bringing things lower at the moment. And on top of that, typically, let's go over gap rules, and Trade Brigade goes over them, and specifically like the psychology on why gap rules are the way that they are. So what we typically look for, at least what he's taught me and what I've applied, I personally don't take gap trades anymore. Like, I don't go to look to fill the gap. I look to fade the gap for a gap fill reversal is what I typically look for on that day. And if we don't get it, it's okay. I just wait for the next day session. I just don't trade that day. But basically what we typically look for is on the open. We look for, depending on how far away from the previous day low or high we opened, I either look for a partial gap fill or a complete gap fill. Today was a partial gap fill as we were about let me see, a little over about $3 away from it, which is a pretty decent amount of movement to happen. So due to the fact that that's what happened, I would look for a partial gap fill, say somewhere around $501.50. And then after that, what I would be looking for is a reversal off of that and any sign on the 15-minute chart that shows that we're getting failure to keep going to the upside. So the reason why it is because institutions, they like to be able to do that to trick and trap other FOMO buyers. They will see this and they'll be like, okay, we understand that there's going to be buyers that want it to continue to go up, as because on the lows, what happened is sellers, they're going to say, hey, we want the market to go lower. So since it doesn't go lower, um, some are going to start to panic and sell out. And then after more and more sell out, it just adds more fuel to the fire. And as more and more sell out, it just keeps going higher and higher and higher. So it kind of just, in a way, it tricks the sellers and it makes it go higher. And then whenever we get to the previous day low, what will happen is the same thing flipped, is that all of the buyers are going to be FOMO because they already lost profits on the sells. They're trying to gain back what they lost from their bear puts or any type of shorts that they put in. So they're already in a bad position already. So they're desperately trying to get into the market. And the moment that it starts to go lower and we start to sell off, few buyers that are FOMO, that are trapped, are going to sell off. And as the first few start to sell off, more and more start to sell off. And that just adds more fuel to the fire for the perfect gap fill reversal, because the psychology of any trend failure or reversal to keep going in the direction of the trade or in the trend, or specifically to the upside for a gap fill reversal, is that when they get trapped there and we continue to not be able to go farther, anybody that's trapped with bad positions at the highs or the lows, this case it's the highs, um, they'll be trapped there. They won't be able to go. Institutions will start to sell off. Be smart. And then as the institutions start to sell off, the buyers will start to get out because they panic. And then as one person panics, more and more people panic, because unfortunately people tend to think in a sheep-like manner and they just go with the crowd. I don't want you to be a part of that. So that doesn't necessarily have to do with, well, it does a little bit, but it's just a little caveat to this video talking about gap fill, a scenario and psychology, basically. So besides that, guys, um, I already explained the gap fill reversal psychology. And lastly, overall, I would say from a higher time frame perspective, markets don't seem like they really want to go anywhere at the moment. After all the bearish movement that we had last week, it appears to be that there's not. We're kind of like consolidating at the moment, and people are just waiting to build up volatility for a later time. We're just starting to like kind of take a breather, is what I see in my opinion. And you can even see that when you look at the internals, because nothing really happened that crazy today. So let's look at this real quick. So yeah, nothing really that crazy. We didn't stay in the negative 1500 to negative 2000. It's just 1.3, 1.5, and look at the tick. It's pretty shitty. So yeah, that's what I got for that. Now let's go over the setups I got. So first off, setups will adjust if we get a gap up or gap down open. But first off, I'm not taking any trades with a delta higher than 0.15 because Friday rules apply. Second, I'm not taking any trades between $506.50 and $499.19 due to the fact that I'm trying to be very picky for tomorrow. So those are the setups I'm going. And if we don't get it, forget about it. I'll wait for next week opportunities. Next is don't be trigger shy because personally I am green on the month. I'm having 2 back-to-back green months, making progress with my trades. So I am being picky, but I don't want to be so picky to the point that if I see a setup that goes along with my strategy, my edge, I don't want to be trigger shy, just being all scared because I don't want to enter it. No, don't do that. Don't be trigger shy, but just be a little extra cautious. Find that perfect balance, basically. And the last two things I always talk about: don't chase the markets, wait for the proper pullback entry, and don't take any trades without the higher time frame 15-minute confirmation and the 1 hour confirmation as well. So lastly, the two setups I got in store is I'm going to be looking for a 15-minute higher low above $506.50. My targets would be $508 and $509 is the optimal target. And lastly, for my bear setup, I'm going to be looking for a 15-minute lower high below $499.19, and we'll be targeting $497.50, and then $496.50 is the optimal target. So that's all I got for today, guys. Hope y'all had a good day in the markets today. Hope y'all handle it properly. Hope y'all are green on the week, and hopefully y'all continue to progress with me, and I hope you progress as well. But again, I'm always happy to do this, guys. Stay safe, stay green, and peace out, guys. I love you guys.